Good morning, ladies and gentlemen. Welcome to the IRB InvIT call hosted by the company for discussing the financial results for Q4 FY22. We have with us on the call today Mr. Vinod K. Menon, Mr. Anil Yadav, Mr. Rishabh Gandhi, and Ms. Swapna Vengurlekar from IRB InvIT team. Mr. Virendra Maheshkar, CMD of the sponsor, is also on the call. As a reminder, all the participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Menon to give you an overview of the significant development during the quarter. Over to you, sir.
Yeah, thank you. Good morning, everyone. I would like to welcome all the investors and analysts on this call. Hope you have reviewed our detailed numbers as per the presentation. During the fourth quarter, January month witnessed an impact on the economic activity and traffic from the outbreak of third wave of this pandemic. The Omicron variant, that is the third wave, impacted traffic growth, especially the car traffic in the month of January 2022. However, the collections for the month of February and March 2022, as updated to the stock exchanges, witnessed a resilient recovery. Our per day collections have improved to over rupees 5.60 crores for the quarter ended March 2022, as compared to rupees 5.18 crore per day for the trailing quarter ended December 2021, showing a growth of approximately 8%. Even compared with the corresponding quarter, toll collections have improved from rupees 4.92 crores per day to rupees 5.60 crores, registering a growth of approximately 14%, which includes recommencement of Pathankot-Amritsar project as well. Excluding Pathankot-Amritsar project, toll revenue growth would be above 7% over the corresponding quarter of the previous year. In case of Talegaon-Amravati project, due to the ongoing ROB works in Nagpur city, the traffic movement will be restricted up to 22nd May 2022 as per the notification from the local authorities. There is a soft impact on the project corridor traffic due to the said restriction at present, and if it falls below 90% of the average daily traffic for previous year, the company would be eligible for an extension in the concession period as per the provisions of the concession agreement. Bharuch-Surat project is the first project under the trust which has completed the concession period and has been successfully handed back to NHAI on 31st March 2022. 4 of our project assets, that is Jaipur-Devli, Amritsar-Pathankot, Talegaon-Amravati and Tumkur-Chitradurga, have received a revision of tariff rate at the rate of 10.16%, which has been effective from the 1st of April 2022. The expected traffic revision for Omalur-Salem project would also be more than 14%, considering the provisional WPI for the March 2022 month. The raw material prices have witnessed a steep hike because of the ongoing geopolitical tensions. Due to a fixed price contract with the project manager for 10 years, that is up to FY30, we will have no impact on the rise of our financials on account of this. With regard to the acquisition of new assets, the trust is in active dialogue with our sponsors, IRB Infra. We are told that they are internally evaluating the options, and we expect clarity on the same in the near future. Basis the clarity and the concept, we will then, along with our sponsors, reach out to our unit holders to seek their guidance on the way forward. I would now request Rishabh Gandhi to take you through the financial performance for the quarter and the year. Over to you, Rishabh.
Thank you, sir. I would like to present the financial analysis for the quarter ended March 22 compared with the quarter ended March 21. The total consolidated income for the quarter ended March 22 increased to rupees 389 crores from rupees 334 crores for the quarter ended March 21. The consolidated toll revenue for the quarter ended March 22 has increased to rupees 384 crores from 326 crores for the quarter ended March 21. EBITDA for the quarter ended March 22 has increased to rupees 332 crores from rupees 275 crores for the quarter ended March 21. Interest cost, which includes the interest on premium deferment, for the quarter ended March 22 stood at rupees 36 crores, which was rupees 35 crores in the corresponding quarter of previous year. Depreciation, which includes amortization, for the quarter ended March 22 has reduced to rupees 171 crores from rupees 190 crores in the quarter ended March 21. Profit after tax for the quarter ended March 22 has increased to rupees 104 crores from rupees 50 crores for the quarter ended March 21. I would now request the moderator to open the session for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We'll wait for a moment while the question queue assembles. We have the first question from the line of Mr. Ashish Shah from Centrum Broking. Please go ahead. Mr. Ashish Shah, your line is unmuted. You may please go ahead. As there is no response from the line of Mr. Ashish Shah, we take the next question from the line of Mr. Viral Shah from Yes Securities. Please go ahead.
Yeah, good morning, sir.
Good morning.
Yeah, so basically, first of all, congratulations on a good set of numbers despite the pandemic. Sir, how has been the month of April and May in terms of traffic when you look at stand out across the portfolio? That is the first question.
I think, Viral, in the month of April, as we have discussed, we have got 10% tariff revision, and traffic in the April also is robust.
Fair enough, sir. Sir, and secondly, in terms of our estimate, when we look at since Bharuch Surat is now, has been handed over back to the government, do we expect the outflow in terms of dividend to be maintaining at the similar range, or there can be some disruption which can be possible because one of the large projects has gone out of the book?
Viral, if you look at the current quarter's number, that is the March quarter number, and if we just take a fire project, gross revenue from fire project, excluding the Bharuch Surat and Surat Dahisar, is 200 crores. And if we remove the 10 crores of revenue share, the net revenue is 190 crores. And if we multiply by 4, then we reach to 760 crores of revenue.
Yes.
And increase by 10% for tariff revision and 5% for traffic growth on a conservative basis. Then we reach a revenue number of around 875 to 878 crores. And 70 odd crores from the Surat Dahisar for balance close to 2 months. Then we reach to revenue of 950 crores and O&M of 100 crores. Then EBITDA will be around 850 crores. Debt obligation including interest and principal is 150 crores. The surplus will be close to 700 crores. 225 crores is the premium in the TC project. The NDCF will be around 475 crores, which translates around 8 rupees payout to the unit holder in the financial year of FY23.
Agreed. Okay, got it, sir. That was really, really helpful. And lastly, sir, since the toll revision has been a significant hike this year, which is close to around 10%. So when you look at next year, there is a possibility that maybe the growth will not be robust, right? 15% growth this year, maybe the next year the aggregate growth may be 5-7%. In that scenario, whether our 8 rupee payout per year is something which is sustainable or something, am I missing something there? Could you throw some light out there?
Yeah. Viral, if you look at last 3-4 years, WPI was very muted. And I think we believe that this is the catch-up effect, and I think this will last for another 2 to 3 years. And though we are not assuming a very high WPI, even with 5% WPI and 5% traffic growth, if I extrapolate the current number itself, we should be able to maintain the payout of around 8 plus with a 10% revenue growth.
Fair. And lastly, sir, this is the big 2 projects which are expected to go off, right, in 23. But post that, there is nothing which is pending and everything will be long term, right? At least for 3-4 years, there is no projects which are going out from the concession agreement. Is the understanding correct? So
that's correct. The next project will go out in FY27.
Yeah, 27. Good. And sir, Bharuch Surat and Surat Dahisar, have we received the concession which were supposed to receive? Because of the COVID thing which was there. So that is now included in our concession or still something can be coming back from there as well?
So we have received the extension concession period in Surat Dahisar project as well.
So basically current status which is there on which is getting over by May. So ideally it will be there for 6 months or that is including the extension which we are talking about?
That is including the extension part.
Okay, fair enough. So thank you so much. I'll join in the question. All the best, sir. Thank you.
We take the next question from the line of Dipen Shah, an individual investor. Please go ahead.
Good morning and thank you for the opportunity. I just had a question on the acquisitions which we have been expecting for quite some time. Now, Mr. Maheshkar is also on the call, so maybe could you just give us some thought process about, what are the discussions, at what levels are the discussions and what is holding up the acquisition, because that is very much needed to fill the void which is going to come from the next 2 projects, that is the Bharuch Surat and Surat Dahisar. So could you just please tell us at what levels are the negotiations stuck and why is it not happening despite the company trying for it for so long now? So some light on it could help us, yeah.
Yeah, very good morning. I completely appreciate your concern. Being the largest unit holders of the public InvIT, IRB is equally concerned to ensure that the public InvIT platform grows substantially. There is a lot of background noise. Can you mute it, please? Yeah, thank you. So, as I was saying, IRB is equally interested and our interests are totally aligned to ensure that this platform grows in a meaningful manner. While appreciating your concern, let me put some light on why no asset could be added. While the public InvIT management did their best in evaluating third-party assets, they did not find any meaningful value add from that platform. But at the same time, the assets that were in the IRB books or the private trust side, they were still not stabilized because, as you know, the concession agreement warrants completion of the project plus 2 years of cooling off, after which the exit policy allows transferring of assets. And in the last 3 years, many number of projects which were under execution either in the IRB side or in the private InvIT platform, they were all under various stages of execution, because of which no asset could be added from the IRB side going forward. I mean in this period. Now going forward, as we are seeing many assets are getting into the zone where they will now start becoming eligible. We are evaluating this in the IRB side as to what will be the right way to go forward on making these assets available. And once the IRB board has deliberated on this and we have some clear clarity on the way forward, we will come out with a concept paper. That's what we have on our mind, because as you know, any acquisition by the public InvIT will warrant voting from the public InvIT unit holders. And to facilitate that, because my own belief is that this particular platform is quoting at a substantial discount to its market value, and as such, any acquisition will need a lot of hand-holding explanation about the quality of the asset, the value that the asset might add on acquisition. And as such, what we intend to do is come out with a concept paper, and once that concept paper is officially floated by IRB on its platform and offered to the public InvIT, we would then reach out to the public InvIT unit holders and explain them the asset that is available for acquisition, what kind of value that the asset would add, what will be the different options for the public InvIT in regard to raising the resources to buy that asset. And after a holistic discussion on all of this, then a formal proposal will be floated for acquiring that asset. This will be the roadmap that we have on mind, which we think will be which will be a way forward that will make the thing easy for understanding for all and adding an asset at the public InvIT level. So these are the early thoughts that we have, and in this manner we will take this conversation forward.
Okay, thank you. But any probable timeline you can give us, like, how much time?
Yes. So you can expect certainly the concept paper in very near future. We are waiting for IRB board and the deliberations at the IRB end to get over. But in a very near future, you will hear about this concept paper. And once the concept paper rolls out, then we will start reaching out to the public InvIT unit holders as sponsors, along with the public InvIT management, to explain the asset rationale and start taking the things forward.
Okay, and just maybe for further understanding, the concept paper will give us options about a few projects which are to be acquired, or is it going to be only one project on which deliberations will be made? And in terms of financing, we already have options. So is it necessary for us to suggest options, because debt is already available for us? We have the headway for debt.
Yes, you are right. So what we intend to do is, if we look at the public InvIT market capitalization today, it's almost around 3,500 crores. So offering multiple assets might not be a prudent idea given the size of the public InvIT. So we will come out with one or two asset visibility, what is available. And also we will give out options of, as you very correctly said, whether it has to be a fully debt funded acquisition, whether it should be a debt plus right. There are several combinations which we are working with, and we will showcase all of those opportunities, what might make sense. And once the detailed deliberation with the unit holders happens and we have some consensus amongst all of us, is when we will think of moving the formal proposal.
Okay, thank you very much and all the best.
Thank you.
Thank you. We take the next question from the line of Dheeraj Thave, Samvad Financial Services. Please go ahead.
Yeah, thanks for providing me opportunity. Sir, my one question is specifically on this March 22 quarter. We see traffic data, we see significant decline across LCV traffic. So all across all assets we see. So while you commented that the car there was decline because of some kind of American impact in January, but can you elaborate a bit on why LCV traffic has declined?
So as per the NHA policy, the vehicles which have gross weight more than 7,500 Less than 7,500 will be classified as LCV and more than 7,500 will be part of truck bus. So post implementation of FASTag, the vehicles have been, most of the vehicles from LCV have been classified as a part of car or as a part of truck bus.
Okay, so that is the reason. And so there is no actually decline, it is a reclassification which has resulted, because we see some kind of improvement in multi-axis vehicle traffic growth, most of the segment, while we see decline in LCV. Hello?
Yeah, you are right. It is more of a reclassification.
Okay, fine. The second question I had is basically now since Surat Dahisar project is moving out and that was taking significant part of O&M expenditure for us, what is the revised O&M and can you share what would be the arrangement with our parents about O&M project management cost for FY23?
I think it's close to 100 crores for FY23.
And this is like, is that some kind of inflation level? Means how exactly is structured? Is it agreed upon every year, or is there is some formula which works basically between the parties?
The price is agreed for initially 10 years. Now close to balance 8 years are still left. The price is already fixed.
Okay. So we shall expect 100 crore in FY23 and future. What should be some kind of indication? Would it be inflation linked or is a fixed price of 100 crore only? Because in that case, we'll see great amount of increase in NCD here.
It's a fixed price based on the level of activity. It's a fixed price, but escalation is already inbuilt in the fixed price. So for FY23, the amount will be slightly higher. And we can, it's already in public domain, we can come back to you with the FY24 O&M number also.
Okay. Wish you all the best. Thanks a lot. I will join the Q&A.
Thank you.
Thank you. We have the next question from the line of Rajan Pedatia, a retail investor. Please go ahead, sir.
Hello. Hello.
Yeah, hi.
Yeah, please go
Can you
ahead.
hear me?
Yes.
Yes, sir, we can hear you. Please go ahead.
Okay. I have multiple questions. One is regarding NAV. Okay. So I am not able to find out any valuation report regarding that. So.
No, we are not clear about your question, please.
NAV, net asset value per unit. Okay. There is no valuation report. I mean, I think it's around 90, but there is no valuation report I am able to find out. I mean, according to SEBI regulation, InvIT has to do valuation each 6 months. So, where is that report? I mean, just well done.
Yes, sir. So we have already completed the valuation exercise. We will be uploading the valuation report in a couple of days on the stock exchange.
Okay, thank you. Second question is regarding see, if it is 5% discount, then it's fine. But we are trading at significant discount. So is there any possibility of buying back our own units? So because that maybe we do not grow, but if we just buy our own units back, so it will be great for unit holders. I mean, is there any possibility or no? That's second one.
While the idea looks very interesting, we will have to check with the regulations because to the best of my mind, I don't think there is any such provision to buy back units, but we can certainly look at it and get back to you.
Regarding is our, I mean, we are having mostly fixed interest rate loans, right?
Our interest rates are linked to MCR rate and they are reset on every 6 months.
Okay. So, and this one is regarding tax aspect of our InvIT and as well as our SPVs. Because maybe in these initial years we will be getting our more interest and all that, but after some time, you know, it will be more dividend portion. So how it is taxable in the hands of SPV and InvIT? So can you throw some light on that? Because I am not seeing, I am seeing, you know, like a 10% rate of tax over last 4 or 5 years like this. So can you put some light on that?
So 10% is the withholding tax, which is deducted by the trust on distribution to the unit holder. And
No, I'm talking about tax on the InvIT itself and its asset, not on unit holder.
FP companies are eligible for ATI reduction, which is available for a period of 10 years out of the initial 20 years. And at the trust level, since it is passed through, the distribution is not taxable at the trust level.
Okay.
Both interest and dividend is exempt once it is received at trust level. When it is paid to the unit holder, interest is taxable in the hands of the unit holder at their specified tax rate. And dividend, whatever the unit holder will receive the dividend, if the SPV company is following the old tax rate, then the dividend is also exempt.
Okay, but in our case, dividend will not be exempt if it comes because we are having lower tax rate, right?
No, we are following the old regime only.
Okay.
It will be exempt in the hands of unit holders.
Okay. I will ask you any questions later.
Thank you. We take the next question from the line of Mohit Kumar from DAM Capital. Please go ahead, sir.
Yeah, good morning, sir, and congratulations on good set of numbers. Sir, you mentioned the principal and premium repayment for FY23. Can you please help with the principal and premium repayment for FY24?
Premium repayment for FY24 is also close to 240 crores rupees.
That's premium, right? And principal repayment of debt?
Principal debt repayment remains close to 150 crores. Principal and interest put together. So close to 100 crores will be the interest, and around 50 crores will be the principal repayment.
Understood, sir. Secondly, on the acquisition, are we not seeing enough small third-party assets, given that we can buy the asset with the leverage? And if I'm not wrong, I think we have roughly 10 billion room available to buy the asset. And the related question is that, is there any possibility that if we refinance our existing loan, we can increase our NDCF by at least 0.5 or 1 rupees on an yearly basis?
I think we have evaluated a lot of third-party opportunities in the last couple of years, but nothing meaningful has been able to come through. And now we are going back, and we will be, now that the IRB portfolio becomes eligible in terms of being made available for the public InvIT, we will be now starting that process as I explained earlier. And when that particular concept paper comes out for acquiring of the asset, we will also take into consideration your valuable idea of refinancing the existing debt, which can free up some more cash flow.
Isn't it will be rational? Isn't it will be more opportune to buy smaller asset and improve the valuation and then come with a concept paper? Because we've been struggling for because I believe there is number of small third party assets should have been available by now, and or should be in the public domain from the NCLT or somewhere that could improve our valuation. Then we can buy for. Then we can come to the unit holders for raising further equity if it requires.
I think third-party assets have not been forthcoming. We have looked at a lot of platforms where such opportunities existed, but nothing meaningful has come through because many of these NCLT assets, what you mentioned, have a lot of other legal challenges which one will have to take up. And this platform is supposed to be a no-risk or a very low-risk platform where we would not want to take any uncharted risk when we buy the asset. And none of these failed assets come with a clean background. They always have some challenges with regard to balance completion of work, challenges with regard to maintenance issues, and banks don't want to take a haircut, viability becomes an issue. So it's not a very easy path to acquire such assets when we want to look at a clean asset which will give the unit holder a very comfortable visibility on its distribution path.
Understood, sir. Thank you and all the best, sir. All the best.
Thank you.
Thank you. We take the next question from the line of Sheetal Shah, an individual investor. Please go ahead. Sheetal Shah, your line is unmuted. You may please go ahead.
Hello, thank you. My question is answered.
Okay.
Thank you. We take the next question from the line of Saurav Chetri, individual investor. Please go ahead.
Hi. Thank you for taking my question. Am I audible?
Yes, please.
Okay. And congratulations on good set of numbers. So my first question is, for past 5 years now, this company has been, in public domain. So what is the strategic vision? I don't see, I've been through all the annual reports and everything, but what is the strategic vision, if any, the company has for next 5 to 10 years?
So I think when this particular trust was formed, this trust was formed and floated by IRB with a vision that this will be a platform which will have completed stabilized assets, and this portfolio will be a kind of a perpetual platform which will keep growing as assets keep coming its way. So with that in mind, this trust was floated by IRB, and it's now 4 years old. We still have around 5 assets that would be a part of this trust. And as you know, IRB itself is a listed entity, and we have been involved in undertaking a lot of other BOT projects, which as I explained earlier in the conversation, are now reaching a situation where they will now become eligible for selling down to the public InvIT, which is a platform which would want to have assets which are stable in nature, proven revenue visibility, and of those kinds. So this will become this opportunity from the IRB side as a part of the ROFO arrangement that we have with the public trust will unfold, and we will start offering these assets. So while IRB will undertake the asset development and bidding side, the stabilized asset platform will then become available on an ongoing basis for the public InvIT to look at acquiring these assets. That was the basic vision when it was floated, and we still adhere to that idea.
Okay, got it. Thank you. And my second question is that, in previous calls, the management had guided that, the DPU per unit would be between 7 to 9 for I think 2 to 3 years. Do we have the same guidance even of the, the concept paper and the assets being acquired from the parent company? Will that be the same?
Yes, in fact, I have just explained the payout for FY23, and we will continue. We are continuing the guidance of 7 to 9 rupees for next 2 to 3 years.
Okay, got it. Thank you very much. I'll come back in queue. Thank you.
Thank you.
Thank you. We take the next question from the line of Ashish Shah from Centrum Broking. Please go ahead, sir.
Yep, thank you. So first question is on the presentation. There is a change in the way the numbers are reported. There's a gross toll collection and there is a revenue share, which is for non-FASTag users, etc. So can you just explain what that means and how should one look at it?
So Ashish, basically the people who are those who are not having the FASTag, they are required to pay double toll rate. And out of the double toll rate, 50% is shared with the NHAI. So then that becomes a part of sharing with the NHAI.
Okay, which is why it is shown separately.
Yes, so basically it becomes a reconciliation issue because in terms of if you multiply the vehicles with the rate, then you get a different number, and thereafter share is there. So that's why to reconcile the number, we have provided details of the same.
Okay, so basically that line item is a revenue share which is paid out of the non-FASTag users toll collection.
Yes.
Okay, right. Secondly, there is a provision for impairment loss of 69 crores. you can just highlight on what account is that in the Q4 numbers.
Basically, the provision for impairment is at trust level for the investment in the SPV companies. There is no impairment at the SPV asset level. The trust has been charging interest at 13% on the subdebt and loan provided to the SPV companies. So this has helped over the period to provide higher returns to our unit holders. Moreover, there is no impact of this on our NDCF or the cash flows.
No, I understand. There is obviously no impact on the cash flow. But which SP are we talking about, or it is all the SPVs put together?
No, this is for Bharat Surat and Surat Desai project.
Okay. Now that the concessions are coming towards the end, we are providing any required impairment for the interest that we must have accounted.
Yes, absolutely.
Okay, fine. Just lastly, on the escrow cash balance which we have, how much would that be on account of the Tumkur Chitradurga, the premium issue?
The balance in the escrow account is approximately 650 crores.
Okay. That is on the...
out of that...
majority of it would be payable to NHI actually.
Sure. Okay. Thank you.
Thank you. We take the next question from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my question. My first question relates to your reply that it will be easier to distribute 8 rupees per year from 23 onwards. Does it include the return of the capital?
It will be total payout. It will be including interest and the return of capital both.
Okay. And secondly, I just wanted to say thank you and congratulate for declaring and giving monthly data for each and every asset and comparing it with past year's assets. So this will be very good gesture from the trust side. So please continue it even in negative side also when this collection goes down.
Sure. Once we make it a process, whether it is up or down, it has to continue.
And thirdly, this Concall, which is easier now you have made to connect with the Concall is easier because there is no registration required. So it's a very easy process. So that is also it's good gesture. And please continue to have this gesture because earlier it was very difficult to get the data and from where it is to be registered and then we come to the Concall and then ask the question. It was very difficult. Now it's become very easier to attend the Concall.
Thank you.
Thank you, sir. Thank you. That's all from my side.
Thank you. We take the next question from the line of Amit Saxena from ASI Capital. Please go ahead, sir. Mr. Saxena, your line is unmuted. Please go ahead.
Yeah, am I audible?
Yes, you are.
Yes, please.
Yeah, sir. So my question was related to, again, buyback. We have been talking about it for maybe more than 3 years now in multiple phone calls, and we are getting guidance from you that we'll be talking with the regulator and getting clarity from it. But nothing significant has come out yet after more than 2-3 years. So, and given the value at which our units trade, I think it can be a major value creator if implemented. So, is there anything which is which can be done, in the sense that anything concrete which can come out of it?
No, I completely appreciate your concern. We will certainly take it up again with the regulators. But as you know, being the new product, there are no set guidelines as such to my understanding on this buyback thing, but we will certainly take it up with them again.
Okay, it will be appreciated, sir. Thank you.
Thank you. We take the next next question from the line of Sneha Jain from SKS Capital. Please go ahead.
Thank you for the opportunity, sir. I had two questions. First would be, what's the potential distribution for FY23 that we're looking at?
As we have discussed, based on the Q4 numbers, whole year's revenue will be around 950 crores and 100 crores is O&M expenditure. So then EBITDA is 850 crores, 150 is debt obligation including interest and principal repayment, and 225 crores is the premium payment. So roughly 475 crores will be available as NDCF, which translates around 8 rupees distribution to the unit holder.
Okay, 8 rupees distribution. And secondly, sir, I wanted to ask, why is the interest component so low this time?
No, I think this concern is well understood, and by splitting the distribution for next year, I think we would look at this aspect of having higher interest outgo and lower face value reduction.
Okay. Thank you, that's all. Thank you.
Thank you. We would be taking last three questions from now. We have the next question from the line of Devendra Agarwal from Yadnya Investment. Please go ahead.
Hello.
Good morning.
Good morning. Yeah. So my question is on this tariff hike. It was revised by 10.1% this time, right? So how frequently do we take this exercise, and what is the factors taken into consideration while having such hike?
This is based on the WPI hike every year. The annual revision of coal rates by the on NHAI is based on the toll policy. So in 2 to 3 of our projects, it's in September, July or September, and all the rest it is in the month of April. So it is
okay,
based
every
on
year.
Yeah, right.
So it's an annual exercise to
Okay.
be.
Okay. Sure. Yeah, that was my only question.
Thank you so much. We take the next question from the line of Satinder Bedi from Beyond Investment. Please go ahead.
Yeah, thank you. Congratulations on a stable set of numbers and distribution. First of all, compliments like caller earlier has also said on releasing the monthly toll data. That's very welcome and enhances confidence. Also, thanks to Mr. Meskar for, in a very elaborate manner, laying out the plans for acquisition of more assets. This gives us the confidence that there is appreciation of what is probably the most key investor concern. We've been waiting for this for last couple of years. Using our low leverage to increase return, will greatly help all unit holders. We must not lose sight of the fact that while we are guiding for 8 rupees or thereabouts, the IPO was floated with a guidance of about 11-12 bucks. So people who might have entered in earlier at higher price points would have such kind of an expectation, and we must strive towards that. So that's one feedback. On questions, Mr. Menon, can you give us a color on how Tumkur Chitradurga is faring in terms of traffic? What is the outlook you see for it? Because it's a key asset, and it has been kind of challenged. Even for this quarter, the traffic data is about 4% down for this quarter year on year. So what's your outlook? Do you feel confident that we'll be able to maintain that 5% kind of increase, which we anyway need because of the fact that our premium increases?
Basically, we are expecting toll rate tariff price as we have been telling you, it is around 10% because of the higher WPI growth. And the traffic growth we are seeing as of today is around 4 to 5%. So that is what we are expecting in the Tumkur Chitradurga project, and I think it would add more value to this portfolio.
So it has not happened, but Tumkur Chitradurga on traffic, the inflation I understand, and I think that's a welcome development. But traffic doesn't seem to be happening. This 5% growth doesn't seem to be happening in PC at least.
I think the last couple of years have been muted across the portfolio because of the pandemic. But barring that, I think all the assets have performed pretty well.
Just to add, traffic mix has changed in case of Tumkur, which is evident from the traffic numbers. So the car traffic has reduced, but the truck and MAV number has increased.
Yeah, I agree. Still, the reality is that we are focusing on. Anyway, fine. Okay, so you feel hopeful that we'll be able to maintain that. On Jaipur Deoli, we've turned out very good numbers. I wanted to understand if the mining ban has been lifted, or is there still a kicker that is expected going forward?
So mid-November there was a Supreme Court order wherein partial upliftment of mining ban has taken place, which has improved the traffic on our corridor.
Okay. And on Pathankot, Amritsar, sir, has the amounts been reconciled? Have we received the monies due to us on account of the farmer protest lockdown? Okay, so is all of that settled, and are the monies in?
No, it's still pending with NHA, and it's being taken up very aggressively with them, but still the monies are yet to be received.
Okay. And there's a MAT credit reversal of 32 crores. Can you kindly amplify that, please?
So this MAT credit relates to Surat Desai project. So in the books of accounts, we have reversed this MAT credit. However, in the income tax, that MAT credit is still available. It is available for a period of 15 years.
Okay. Fine. That's about it. Thank you very much. We do look forward to the concept paper at the earliest, and we fully understand Mr. Maheskar's point of view. Okay. Only thing is some solution is still needed. We somehow need to sweat our equity more to try and move back to the 10, 11, 12 in the medium term at least, if not the near term. Thank you very much, and all the best.
Sure. I think the 10 to 11 rupees distribution was the guidance which was floated out for the first 3 years when the InvIT went public. And I think we stood ground, and that kind of distribution did happen. And in the initial guidance also, it was very clear that there will be 2 assets which will be going out in this financial year. So to that extent, the distribution is taking a necessary adjustment. But point well taken. Once we are able to add more assets on a futuristic basis, I think certainly the visibility of distribution can improve.
Yeah, thank you. Thank you very much.
Thank you.
Thank you so much. I now hand the conference over to Mr. Menon for closing comments. Over to you, sir.
I would like to thank all the attendees today on this call. Hope to see you soon. Thanks.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. We thank you for the participation and for using Chorus Call conferencing services. You may please disconnect your lines now. Thank you and have a great day.